Hi everyone, welcome to pallavijhastocklens. So in the last week of June 2025, JSW Paints announced that it would be acquiring around 75% stake, that is 74.76% stake in Akzo Nobel India for around 9,000 crores, and that it would make an open offer up to 26% stake in Akzo Nobel for rupees 3,418 per share. Now it is mandatory by SEBI that if you're going to acquire a majority stake of more than 25% in a public company, you necessarily need to make an open offer. So the deal is yet to receive its approval from Competition Commission of India, and it is likely to see through by end of 2025. Before getting into the deal details, first we will see what is the background of JSW Paints, what is Akzo Nobel India's background, why this deal occurred, and what is the synergy benefits that is expected. Okay, so JSW Paints is a part of the $24 billion JSW group led by Sajjan Jindal. And JSW Paints was started in 2019, around 6 years before. Okay, and JSW Paints is an unlisted entity as of now. 88 to 90% of JSW Paints is being held by the Jindal Family Trust, and the remaining 10 to 12% is held by JSW Steel. Okay. Now, what is also more important to notice that JSW Steel, in a phased manner, has invested around 750 crores in JSW Paints over a period of 3 years. So, in terms of revenues, okay, JSW Paint, it crossed the 2,000 crore revenue mark in FY24, and its target is to achieve 3,000 crores for FY25 and 5,000 crore revenues for FY26. So what Parth Jindal, who is the MD of JSW Paints, what he said is that this 2,000 crore mark they've been able to achieve within first 5 years of its operations, which is more than 10% of industry growth. Okay. Coming to the capacities, okay, manufacturing capacities. So JSW Paints has two manufacturing units. One is its industrial coating plant, which is in Vasant, Maharashtra, and a decorative paint plant, which is in Vijayanagar, Karnataka. The combined capacity of both these two plants, that is both the decor plant and the industrial coating plant, is 170,000 liters per annum. Okay, and also for FY27, JSW Paints has a planned capital expenditure of 503 crores. So very quickly, what we saw till now is JSW Paints. It has started just 6 years ago, and within first 5 years of its operations, it's been able to achieve 2,000 crore revenue mark. And it has two plants. One is decor plant and one is industrial coatings plant. The combined capacity is 170,000 ml per annum. Okay, and 80 to 90% is being held by Jindal Family Trust, and 10 to 12% of JSW Paints is held by JSW Steel, and JSW Steel has also invested around 750 crore rupees in a phased manner over the past 3-year period. Okay, now coming to Akzo Nobel. Akzo Nobel, before this acquisition, is the fourth largest paint company in India. It has a very premier brand, that is Dulux, for itself, and 35% revenues come from decorative business, and it has high market share in the premium and decorative segment. Okay, so we all have heard of Dulux brand, right? So that belongs to Akzo Nobel, which is now being taken over by JSW Paints. So now we'll see how did the deal start in the first place. Okay, so last year in September 2024, Akzo Nobel announced that it is doing a global strategic review, and in alignment with its global strategic focus realignment, it wants to focus on leadership positions in key global coatings market. Now, JSW Paints saw a significant opportunity in this, and what is the opportunity that it saw is Akzo Nobel wants to focus on global key coatings market, and that it wants to get away with other line of business, and that is why not we acquire Akzo Nobel. Okay, that is the kind of thought process, that is the kind of opportunity that JSW Paints saw. Okay, the question is, in Indian paint industry, Akzo Nobel is at number 4. So when you're at number 4, when you have premium brands like Dulux and you're making good profits out of it, then why are you wanting to sell it? Okay. Also that you have Akzo Nobel has very strong presence in metros, in tier 1, tier 2 cities. Okay, and that's why do you want to sell your business? Okay, so first we'll see this, and then we'll see what are the benefits, what are the synergy benefits that JSW Paints saw in this. So I'll take you through what the management has to say. what AkzoNobel's management has to say in its press release. Okay, so on being asked to AkzoNobel's leadership that MNC companies are coming to India at this point and you're looking to exit from India at this point. So what is the reason behind it? Why do you want to sell your brand? Okay, why do you want to sell your Dulux brand? So what AkzoNobel CEO Greg said is, his name is too long and that's why I'll keep it limited to Greg. Okay, so AkzoNobel's CEO Greg said that India is a high potential but highly competitive market and that local players are taking over the international companies. Okay, so what they are saying is that local players are taking over the international companies because they have very good local expertise, they have very good distribution network. Okay, and over time even paints industry is not going to be isolated from this trend. Over time even paint industry international players are going to be overtaken by local players, and that is one reason that AkzoNobel's management has to say. And he also went on to say, Greg went on to say that in paint industry itself we're going to see, except the number 3 position company Kansai Nerolac, everyone else is being owned and funded by Indian companies and Indian families. Okay, so it's not going to be very long before this particular international player AkzoNobel was to be taken by some other local player. So that is why they're taking this stance, is what he said. The second reason that he said is that AkzoNobel has good presence in big cities, in metros, in tier 1, tier 2 cities, but it does not have a very strong distribution in smaller cities. The depth of distribution, the distribution network, the traction of distribution network that should be there is not there as much as it should be. Okay, so that is another reason. And I'm quoting as it is, as he said, as Greg said, AkzoNobel has strong product quality and brand recognition, but lacked scale and local firepower to fully capitalize market potential in India. Scale, we know the mass scale of operations that is required, and local firepower, AkzoNobel's head says that they lack the local firepower to capitalize market potential in India. What is local firepower? Strong distribution channels, strong local teams, strong expertise of the localized things, okay, and local partnership, local marketing reach, all this seems to be lacking. So he says scale and local firepower seems to be missing or not adequate as much as required. Okay, I'm continuing what he said. So as a multinational, we were at times distracted. We weren't capitalizing enough on the value of our brands or on the quality of our products. What we missed was the ability to take that promise and transform it into business and market share. So when we saw our portfolio, we found better opportunities elsewhere and felt that for India, a local partner could do it better than we could. Okay, given local players are taking over international players, and that we are lacking so much distribution channel, the depth of distribution channel and distribution networks that we should be having, we're lacking in that. We're lacking in scale. We're lacking in local firepower. Okay, so when they looked at their portfolio, what they found is maybe they could look for better opportunities globally, and that for Indian market, for their presence in India, they could find a local player who could handle it better, who could do it better than they could, and that is one reason why they wanted to sell off this particular line of business. Okay, so when AkzoNobel's CEO was asked why JSW Paints, amongst others, so there were others also who were interested in this deal. So what AkzoNobel's head Greg had to say is that given JSW Paints' presence in this sector already, they are in this particular sector for 5-6 years now, and they're doing well, and given their aggressive pace, why? Because they've done well, they proved themselves in other sectors like steel, energy, infrastructure, and they're looking to list JSW Cement as well. So they thought that this aggressive player is good for our business, okay, and they should be able to handle it well. So that is the reason they chose JSW Paints. So Greg said that this stake sale aligns with your strategic focus to realign business. What is their focus? Is to maintain leadership position in key coating market globally. Okay, so what Greg said is AkzoNobel is selling its decor business to JSW Paints. AkzoNobel is selling its liquid coating business to JSW Steel, but it is not exiting India completely. Okay, it will retain full ownership of the powder coatings business, and it will also be a technology partner to JSW Paints in all of its coating business under a royalty agreement, which is 4.5% of sales. What we understand from this is Akzo Nobel, the number 4 player in Indian paint space. So they are not completely exiting India business. Okay, they're selling their decor business to JSW Paints. They're selling their liquid coating business to JSW Paints, but they're retaining 100% full ownership of the powder coating business, which is the segment in which it wants to maintain its leadership position globally. Okay, and it will also be a technology partner provider to JSW Paints in all of its coating business, which is under a royalty agreement in which JSW Paints is going to give 4.5% of its sales to Akzo. So Akzo Nobel's CEO Greg, he also said that it would take around 2 to 3 years for the Indian paint industry to settle down, and that building a brand from the scratch is very difficult, and therefore it is better to acquire an already established brand, and that is what JSW Paints is doing. Instead of building it from scratch, it is acquiring Dulux Paints. So Greg, when he was asked that if AkzoNobel is planning to return most of the money to shareholders from the sale proceeds of Indian business, what he said that even after returning money to shareholders from the sale of India operations, it will have enough money that will go to AkzoNobel's balance sheet, which will be used to fund for better opportunities that it sees globally elsewhere. That is meaning to say they're not in any financial crunch as such. They're looking for better opportunities globally, and also they feel that paint industry in India it will take some years to settle down, and why not sell liquid coatings business and decor business in India and invest that money elsewhere, apart from returning money to shareholders. They're not in any financial crunch as such, and there is no any trigger point that that they want money and that's why they're selling. It's not like that. That's what Greg had to say. On the face of it, how it appears is that AkzoNobel, it saw that it does not have enough local distribution network. The level of the depth of local distribution network that should be there is missing. Scale is missing, local firepower is missing, and that local players are taking over international companies in the segment, and that they would not be left behind. So that is what triggered them to do this, and that they're not selling, and that they want to retain or build global leadership position in key coatings market, and that's why they sold their decor business and liquid coating business to JSW Paints. Okay, and that it would retain full ownership of powder coatings business, and that it would be a technology partner to JSW Paints under a royalty agreement, which is 4.5% of sales. So this is what it appears. But how things appear and how I understand is that in November 2024, AkzoNobel has announced its global strategy review. Okay, because of this, JSW Paints saw this opportunity. But in the same year, in February 2024, what has happened is that Birla Opus has entered the Indian paint space, and they made an investment of 10,000 crores. Okay, and within the first year of its operations, they've been able to make 4,000 crore revenues, and they've also been able to snatch the market leader's market share. That is, Asian Paints had more than 59% market share, and Birla Opus coming into this space, it's been able to take away around 6 to 7% market share. Okay, so a new entrant taking away market leaders' market share substantially, like 6 to 7%, is a substantial percentage. So that is why I feel it triggered, which is in alignment with what they said is that local players are taking over international players. But the main trigger point is Birla's entry into the paint space in 2024 February. Given Birla's Aditya Birla Group's entry into the paint space in February 2024, this seems to have mainly triggered AkzoNobel's exit from India, and therefore it becomes important for us to discuss Birla Opus. Okay, Birla Opus is the name under which Aditya Birla Group under Grasim is operating its paint business in India. Okay, so Birla Opus is the paints division of Grasim, which is part of the Aditya Birla Group. And Birla Opus was launched in Feb 2024 with an investment of 10,000 crores. And Birla Opus is aggressively working to make 10,000 crore revenue from paint business by the completion of its third year of its operations. So what Birla Opus is saying that within 3 years of its operations, by the end of the third year of its operations, it's targeting to make 10,000 crores in revenues and break even EBITDA. Okay, and if it manages to do so, That will make Birla Opus number 3 in the paint industry in India. That by beating Kansai Nerolac. So Kansai Nerolac's present revenue for FY24 is around 7,800 crores. So if Birlas are going to make 10,000 revenues, they're going to beat Kansai Nerolac's third market position. Okay. So according to reports that came earlier, Birla Opus, they offer discounts to dealers, and so that the dealers sell their products more than Asian Paints products. They hired managers from Asian Paints, mid-level managers from Asian Paints, Birla Opus hired, and they also set up factories near Asian Paints units. So these are all allegations which Birla Opus has denied. But recently what we heard is that Birla Opus has complained to the Competition Commission of India that Asian Paints is misusing its market dominance, okay? And that how it is doing so, it is offering discounts and incentives such as foreign travel to dealers in exchange for exclusively selling its products. And Birla Opus has also alleged that sales targets was increased for dealers who dealt with Birla Opus products, okay, and negatively pressurizing dealers. And that Asian Paints also forced landlords and transporters to refrain from engaging with Birla's products. Okay, so CCI has, the Competition Commission of India has ordered for a probe, and the results will be out in like 90 days time frame from now. So far, what we saw is that what triggered AkzoNobel to make this announcement, okay, and why did JSW Paints see an opportunity in this, and we also saw the significance of Birla Opus aggression and the way it has been able to perform within 1 year of its operations. Okay, now we'll see the most important part. The most important part is that what are the synergy benefits that JSW Paints expects out of this deal. Okay, so if you're going to see at Indian paint industry, number 1 position is occupied by Asian Paints, okay, with around 52% market share. So earlier it had 59% market share. As soon as Birla Opus entered into the paint space last year in 2024, this 59% became around 52%, 51.7%, 52% is what Asian Paints now owns. Okay, now this is followed by Berger Paints, which has around 17.6% to 18% market share. Kansai Nerolac, it is at number 3 position, and it has around 12%, that is 11.9% market share. Okay, this is followed by Akzo Nobel, which has around 6.2%. Akzo Nobel has around 6.2% market share. 5th position was owned by Birla Opus, which has around 6.1% or 6.2% market share. Since after Birla Opus comes JSW Paints. So JSW Paints has 6th position with 3% market share. Now that the 6th position company is acquiring the 4th position company, that is AkzoNobel, JSW Paints now gets direct 4th position. Okay, from 6th it is now at 4th position. That is one advantage. Second advantage is that JSW Paints revenue for FY24 was reported at 2,000 crores, okay, and AkzoNobel's revenue was reported as 4,000 crores, okay. So JSW Paints now as a combined entity with AkzoNobel can say that it has 6,000 crore revenues. That is triple the revenues that it was previously having as a single entity, okay. The combined market share that you're going to see, JSW Paints earlier had 3% market share and AkzoNobel had 6.2% market share. Now with this combination, through this acquisition, the merged entity is going to command around 10%, that is 9.2% of the Indian paint space. Okay, so that is third advantage. Earlier only 3% and now 9.2% through acquisition, the combined thing. It is definitely an advantage, right? Also, JSW Paint, it aims to achieve a target of 10,000 crore revenues in the next 3 years. Okay, so what they said is within first 5 years of operations, they were able to achieve the 2,000 crore revenue mark. Okay, and 3,000 crore is the target for FY25 and 5,000 is the target for FY26. And within 3 years from now, they're going to make the target is to make 10,000 crores in revenues, and therefore they would take up the third position of Kansai Nerolac. Now remember, Birla Opus also has the same target, and JSW Paints is also giving the same target of 10,000 crores. Okay. Now the third number position, Kansai Nerolac, they have 7,800 crores. So will they not improve to 10,000 crores, and why would they let these two overtake them? It's something that we need to see. Okay. Okay. The next point is that AkzoNobel has the next synergy benefit is AkzoNobel has retail dealers close to 19,000 dealers. That is, Akzo Nobel India has a retail network of 19,000 dealers, whereas JSW Paints has dealers of around 9,000. 9,000 is the count. Okay, so even if there is overlapping of 10%, Parth Jindal said, even if there is overlapping of 10%, that is around 1,000 dealers, still our 9,000 dealers plus Akzo Nobel's 19,000 dealers with an overlapping of 10% makes it to 26,000, 27,000 dealers. So more the dealers, more the marketing, more the distribution, more the localized distribution strength, right? Very quickly till now, what we've discussed the synergy benefits is that from 2,000 crore revenues, JSW Paints now can say that it has 6,000 crore revenues through this AkzoNobel acquisition. Second, from number 6 market share, market leadership position, now it is in 4th level position. From 9,000 dealers as a single entity, now it has 26,000, 27,000 dealers as a combined entity, so which is a very big thing. Okay, a strong distribution network is a very big thing. Now, coming to capacity uplift, so as I already said, JSW Paints has two manufacturing units. One is your decor manufacturing plant. The second is your industrial coatings plant. Okay, and the combined capacity is 1,70,000 kiloliters per annum. And Akzo Nobel has a capacity of 2,50,000 kiloliters per annum. So, as a combined entity, now JSW Paints can say it has around 4,70,000 to 5,20,000 kiloliters production capacity per annum. Okay, so capacity increase from 1,70,000 kiloliters to 4,70,000 of 5,20,000 kiloliters is a very big thing, right? Next benefit is Akzo Nobel's Dulux Paints brand is a very a premium thing, okay, and this is a household. Dulux Paints is a household name in Indian markets, and they have premium positioning both in urban as well as semi-urban markets, and they also have wider margin in the urban region. In the urban areas, Dulux Paints is able to garner more margins, okay, and Dulux Paints has strong presence in metros, tier 1 and tier 2 cities, whereas if you see JSW Paints, they are strong in mass markets, in value segments and in rural areas, tier 3, tier 4 smaller cities. Okay, so now the synergy benefit which Parth Jindal spoke is that along with now accessibility to Dulux Paints markets in the metros, tier 1 and tier 2 cities, and maintaining their own strength, that is JSW's Paints strength. They will continue to maintain their own strength in rural areas and tier 3 and tier 4 cities and in value segments and in mass market segments. Now they have both in their hands. They have access both to metros and bigger cities along with their hold in smaller cities. But now we'll see what has Parth Jindal to say apart from the synergies that we saw. What are the other things that he has to say? So what Parth Jindal said is that with Dulux's strong presence in premium decorative market and Akzo Nobel's leadership in industrial coatings like auto refinish and marine, this deal will help JSW Paints significantly expand its footprint in India's decor as well as industrial coatings market. Okay. So not only they're getting Dulux brand from Akzo Nobel, Akzo Nobel also has its leadership in industrial coatings like auto refinish as well as marine, which JSW now has access to. Okay, Parth Jindal says after this deal, they become number 2 in industrials and number 4 in decor space. And he's of the opinion that he wants to become number 3 in the decor space as well, and that they would do it in a sustainable manner. Their target, Parth Jindal says, the aim is to be number 1 in industrials and number 3 in decor space. In industrials, they're already number 2, they want to become number 1. And in decor space, they're number 4, they want to become number 3. So what Parth Jindal goes on to explain further is that last year was an exception, that paint industry didn't grow as such and it was stagnant, the decor segment was stagnant. It's once in a while thing. And that the decorative side was flat. And the industry as an industry didn't grow. But over the past 2 years, industrial coating has been growing faster than the decorative segment, and it continues to grow faster. And that is why Parth Jindal sees very good growth opportunity in the industrial coating segment. Okay. So what Parth Jindal says further is that only in India do we see that decor segment is occupying 75% and industrial coatings is occupying just 25%. Okay. And as as India industrializes, industrial coating side is going to improve. Okay. And the decor side is going to gradually proceed towards the industrial side to mend that gap. Okay. And therefore, industrial coating side as a business has more room to grow. When Parth Jindal was asked, what is your opinion on competition from Grasim, that is Birla Opus? So what he said is that though margins in decorative business will be under pressure due to intense competition, but they will fight over it. And even if they are forced by competitors to cut prices sharply, the company will not do it, and their eye will be on profitability. That is to say that, according to Parth Jindal, what the industry participants right now, what they're doing is they're offering deep discounts and other incentives to the dealers and customers so that they are able to maintain their market share. But what Parth Jindal is saying is that they will not resort to all of that, and their focus will be on to build and enhance their profitability. So Parth Jindal, apart from all this, he went on to say that the target is to make 10,000 crore revenues in 3 years' time. Okay. So what we need to understand now is that JSW Paints right now it was making 2,000 crores is what it reported. With this combined entities synergy, it could say that 6,000 crore revenues is what it's making. Okay. Now this 6,000 crores is around 2,000 crores less than what Kansai Nerolac has already reported for FY24. Okay. So Kansai Nerolac, which is at number 3, it reported 7,800 crore revenues. So if you keep around 8,000 crore revenues, JSW Paints is still 2,000 less than that, and it is almost half. It is at almost half of what Berger Paints is currently making. Okay, Berger Paints is currently making revenues of 11,500 crores that it reported. So you're half of what it is making, and you're almost 5 times lower than what the industry leader Asian Paints is making, around 34,000 crore revenues, right? And the new entrant last year, Birla Opus, within their first year of operations, they've been able to report 4,000 crore revenues, and that the target is to make 10,000 crore revenues and break-even EBITDA by end of year 3 of their operations. JSW Paints also has the same target. Within 3 years, they want to make 10,000 crores revenues so that they're able to take market leadership position number 3, right? What we need to see is that both JSW Paints as well as Birla Opus is eyeing on number 3 position. But if the industry is to grow, all the participants are going to grow. And the people sitting at number 3 position, they're not going to sit idle. They're going to grow as well, right? So even with JSW Paints' aggressive pace, they're going to see more or less the same growth trends along with other participants. Now, this can be changed, or this will be changed if at all there is some consolidation. So now let's see the funding part, how this deal will be funded. So JSW Paints said that it would acquire 74.76% stake in Akzo Nobel India for around 9,000 crores, and it would make an open offer of up to 26% stake in Akzo Nobel for 3,418 per share. Akzo Nobel's CEO, Greg, what he said about the valuation, what he said is that the transaction is based on a total enterprise value of approximately 1.4 billion euros, which represents an EV/EBITDA multiple of 22 times. And this includes Akzo Nobel's liquid paints and coating businesses in India. So when they had this press meet, there was this joint press meet, what Parth Jindal said is that the company has already tied up required funds to close the deal with equal contribution from promoters, from internal accruals, and from private equity partners. That is 1/3 from promoters, 1/3 from internal accruals, and 1/3 from private equity partners. And that there are enough private equity investments in line, and they are zeroing in on who to proceed with. And in case PE investments don't go as planned, they have a backup in place. Depending on response for open offer, he said the promoters will ensure the promoter holding does not go above 75%. Okay, And in the latest development, so initially what Pajindal said is 1/3 will be provided by promoters, 1/3 by internal accruals, and 1/3 by private equity lenders. But in the latest development, the news that we have, what JSW Paints said is that it has secured 9,300 crores in three parts. Okay, the first part is 3,300 crores, that is through an operating company level debt. So, operating company level debt, they're going to get 3,300 crore rupees through foreign lenders at 10%. The second part, that is 3,000 crores, is through loan against shares from domestic mutual funds, and the remaining 3,000 crore through convertibles at holding company level from private credit funds. So Indian paint industry is quite stagnant time being, and it is expected to grow at a CAGR of 9.38% for the 5-year period 2025 to 2030. And this will be because of increasing urbanization, rising disposable income, infrastructure growth, and growing demand both for aesthetics and protective coatings. What industry's opinion is that there are more players in the industry, there are more participants, there's more production than the actual demand. Okay, production is superseding demand, and there are incoming more and more participants are coming into this industry. And so earlier the industry growth was 11 to 12% growth was what it was seeing, but now it is quite subdued. Okay, and the industry opinion is that over years, gradually, the industry is going to get consolidated. Okay, and all these small players holding fractional market share, they're going to be taken over by the bigger groups. As far as Birla Opus and JSW Paints is concerned, both want to become number 3 in decor space and want to make 10,000 crore revenues. So unless they are going to overtake consign and relax very aggressively, or some kind of consolidation takes place, there's a very aggressive pace of revenue making, then maybe it is possible. Or if there is a consolidation, overtaking or acquiring industry companies, then it is possible. Otherwise, this is the pace at which it is going to grow. So that's it for today's session. Thank you for watching.